You sweet son of a bitch. Thank you for joining us, dude.
Pleasure to be here with you. It was great catching up with you at Pacific Bitcoin earlier this year, and thrilled to be catching up with you guys in, on the pod.
As are we.
Pleasure.
Listening to you on What Bitcoin Did, along with, you've been on a ton of different podcasts, by the way. I didn't realize until I was doing a little research for this. You've been on almost everything. But you had a story that really hit hard with Peter about the shark attack, or almost shark attack. The near miss that you had out on a paddleboard. Just blown. Like, I had shivers going up and down my spine. Listening
my
to
heart
you
rate
recount
was
the way
elevated.
you almost got consumed by a great white. That was wild. Any other? I mean, I don't want you to have to recount the entire thing for us, part by part here, but honestly, one of the most skin crawling stories I've heard on Peter's podcast and in general. Like, that had to have been a wild experience.
It still, it doesn't feel real, looking back on it, like just how much danger I was in. And, Bitcoiners talk a lot about black swan events, and this was the perfect setup for that. There hadn't been a shark attack in Sydney in 73 years, so I presume that there were no sharks in Sydney. And I was training for a paddleboard race in Hawaii, which was between the islands. It was a 32-mile race. And so my training was basically paddling, maybe 15 to 20 kilometres, or roughly about 12 to 15 miles as a training run. And I'd speak to the local lifeguards who are sort of in and around the stuff you guys do, and they'd say to me, I'd like, come for a paddle with me, be a lot of fun. And they're like, well, we're not going out there. I'm like, come on, there hasn't been a shark attack in 73 years. And they're like, yeah, there's still a lot of sharks out there. We're not interested in that. And it's like, oh, okay, well, I'll just do it by myself. And, that naivety and in going and doing that. And that wasn't the first paddle I did. Like, I did hundreds of paddles similar to that to get ready for that race. But, it makes me nervous thinking about it. But to be within a metre of a 3 to 5 metre great white shark when you're, half a mile offshore is absolutely terrifying. And the worst part is, like, I had to use my hands to actually move if I wanted to move. So,
right.
When you talk about sharks and you see a shark in the wild, they always say, oh, now if you see a shark, just don't move. And it's like, pardon the French, but fuck that. I'm not dying out here like a bit of bait. Just come up and eat me while I'm just laying there limp. I'm like, you know what? Channeling my inner 50 Cent, I was like, you know what? Just die trying. Just get to the beach as fast as you can. And literally I spent maybe 45 minutes. Well, yeah, probably close to 45 minutes in the water with this thing. And I've got to say, it was terrifying. Like, it got close enough to me that I could have literally fallen off the board and touched it. So,
wow.
And when that happened, I was probably a mile offshore.
The thing legitimately stalked you.
Yeah, for 45 minutes it followed me. And you guys probably see this all the time, but when you do, when you have adrenaline, it really messes with your decision-making capabilities. The come down from the adrenaline, it's like, so I can only imagine what you guys do with your work. You're all juiced up on adrenaline, and then, it drops and you've got to make clear decisions. I clearly made some very poor decisions after initially seeing that shark. And the decision was, rather than go to shore, and I was only 500 meters or 500 yards from the beach, I literally turned around and started paddling back to Bondi, which was like another hour and a half in the water with it. And it wasn't for another 30 minutes that it popped up again next to me after feeling the water movement underneath me that I realized, oh shit, I have made a grave mistake. Like, it could be a fatal mistake in paddling back to Bondi. I should have got out of the water half an hour ago. But luckily for me, it didn't do what it should have. It basically did a whole lot of nothing and followed me around, and I didn't have to worry about any of that. So I fortunately got to shore, and needless to say, I don't paddle offshore anymore. It's I've given that one away.
That shark would have just been following a trail of incontinence if that was me on that board. I can tell you that for sure. That is that's a wild story.
Peter, you must just be uniquely tasty shark food. I don't know. It's 70 some years. Nobody gets attacked, and then it just decides you sniff up your butt. I don't know. That's crazy.
Yeah.
to your adrenaline comment, couldn't agree more. I mean, it fucks with you when those endorphins are pumping and that heart rate's through the roof. And I think one of my observations, obviously, there's tons of high stress, high intensity vocations and jobs, but from what we do, it can get pumping. And I think what I've had to realize over the years of being a firefighter is you're never going to control the fact that that's going to happen. Your heart rate's going to be through the roof. You're going to be super nervous. There's things that are going to amp you up. It's about how you cope with that stress. And I do think that can be a learned skill, right? If someone's weak at that and tends to freak out, right? Which, Josh, I'm sure you'd agree. We see people start this career that come a long way. When they first start responding to 911, they do dumb shit. They pull the pigtail out as they're leaving the bay. They leave their turnout gear on the apparatus bay floor, headed out on a fire alarm. I mean, there's been some unbelievably stupid shit that they would never do with a clear mind and no stress. But as time goes on and they're under those tensions more often, you build that reflex. But there's nothing quite like being stalked by a great white shark. And we're glad you're here. We're glad that thing spared you. It allowed you to come on the Blue Collar Bitcoin podcast. Thank you to whoever that 3-meter great white is. Wait, what's your final tip? How long was it? Give us an official measurement.
I was
talking about the shark.
Yeah.
He just comes out and goes, I'd say six flaccid, 9 hard. Oh, you're talking about the shark.
Ooh, it's a grower, not a shower.
Oh, how many minutes in are we? We're already there. Great. I personally think it would probably be over 13 feet. So the reason why I say that is I got to see its dorsal fin clearly, and what I didn't see was its tail. And I think a great white needs to be over 13 feet to have its tail sitting in the water, because as they grow older, they sort of bend and they sort of end up being a bit like a banana, but the younger sharks and smaller sharks end up quite straight. But so given I couldn't see its tail, I think it's over 13 feet and,
shaped like a banana. Yep. I hear you. Peter, give us a fairly thorough breakdown of who you are and your background. You've been on a lot of these shows. I know you've given it before. People like to latch on to your big valuation number. There's a lot more to you and your background than just throwing out billions on Bitcoin. And we're going to get into that because you're actually a very nuanced, balanced, thoughtful thinker with an enormous amount of experience in finance and advising in markets. Feel free to spare no detail. Catch us up to speed on who you are and how you got here.
Sure thing. My interest in business started with my father at an early age because he was self-employed. He owned a waste management business and revolving around oily waters and sludges, waste treatment, and built a very successful business on that. We always talked about business from an early age and knew that I wanted to be in business in some capacity. So I went to university, studied accounting and finance. Those two majors were able to give me the broadest ability to go into business because it's the most broadly used majors across that. And then from university or college, school, I went into a fund management business called BT Funds Management, which was the old Bankers Trust. It had a fabulous reputation, and they did some wonderful things during the 1987 crash. They were about the only investment bank that actually called that crash and managed to make millions, if not billions of dollars in that 1 week period. I was there for a very short period of time, and then I had a chat to a mate of mine now, but a total stranger at the time. And I was fairly aspirational as a 21-year-old. I wanted to be an investment banker and earn $1 million a year. I met this great man who's still a great mate of mine to this day. I catch up with him every other week on average. And for the first time, I hadn't known him, never met him before in my life. And within 30 seconds, he said to me, "Pete, what do you want to do with yourself?" I said, "I want to be an investment banker and earn $1 million a year." And he took one look at me and said, "Mate, you're too stupid to do that. Why don't you come and do mortgages where we're all stupid?"
I love that honesty, though.
You got to love a mentor who's just dead fucking honest with you.
You know,
that's not really the way the.
Like, damn,
I'm picturing the
Sorry,
Matthew
that guy.
McConaughey character out of The Wolf of Wall Street when he's talking to the young up and coming broker. Like, I just can't imagine him going, "Mate, you're just too stupid for that."
Yeah.
Well, he's probably more of a character of Alec Baldwin out of 30 Rock.
Okay.
He's that type of guy. So he was fabulously instrumental in getting me into mortgages. And sort of some background there is, at the time I'd spoken to the managing director of Credit Suisse in Australia at the time. I'd spoken to the chairman of Deutsche Bank. I'd spoken to a director of the equivalent of Goldman Sachs, JB Weir, which was actually bought out by Goldman Sachs. None of these guys could give me a wall to run at. And as a young guy who just wants to work their guts out and, you know, get ahead in life, no, none of those guys could give me a clear direction as to what to do. And here's a guy who, although he was very insulting, he gave me a direction to run at. And he said, look, here's a 26-year-old who's making $250,000 a year. He's been doing it for 3 years. You know, you can do that. And I was like, you know what? He makes sense. I'm going to run at that and give it my best. So I left, you know, the world of funds management and investment banking to basically pursue mortgages, and was reasonably successful at that. Ran a really good business. You know, provided a great income and stability. It also gave me a really great understanding of credit markets and how they work, and assessing risk, figuring out, you know, who can afford what and what the banks look for when it comes to assessing, you know, what represents a good risk to them, understanding the 3 C's of collateral of lending, which is capacity, collateral, and character. I think we'll talk about Bitcoin as collateral later on in the
Yes.
piece, but you know, this totally redefines what makes a good loan or a good borrower. From there, I had a great chat to one of my father's great friends and advisors, who was a chairman of one of our biggest financial institutions here, and this is pre-GFC. He said, "Pete, you're on the wrong side of the balance sheet. You need to get to the other side. There's going to be some problems in the mortgage market." So with that, I reinstituted all of my training in financial planning, and the rest of it moved to the other side of the balance sheet, so we could give not only advice on credit, but we could give advice on equities, investments. And that financial advice revolved around much more than just, you know, what are the best investments to make. A lot of the work around the financial planning and advising comes around in putting clients in the best structures for them, because that's where the risk-free return is. You know, if you're sitting in the wrong structure, then, you know, you could have a 30 to 50% less return by just being in the wrong structure. So I look at that and think, well, this is a risk-free return, so we want to concentrate on being really good at that. Because
right. When you just, I just want to interrupt there for 1 second, because I think that's a really important consideration for people that I think a lot of people overlook. Like, what you're saying there is like the way you structure your own personal, like, say you're using a trust to structure all your assets into, versus, you know, being a single individual, because that way you can take advantage of loopholes. I don't know if you would call them loopholes, but whatever you want to call them, like tax advantage situations is what you're describing, correct?
Correct. And it allows you to have discretion in how and when you pay your tax. And a lot of the return is based on what are the tax outcomes. And you don't want tax to get in the way, or tax considerations to get in the way of the investment decisions that you're making. But it is a big consideration, because if you put it in the wrong structure, then, you know, you're going to get 50% less return on that investment. So it becomes really critical to get very good at that, because that's where you get your risk-free return, I believe, in structuring things correctly.
Bitcoin 2024 is moving to the heart of Bitcoin country, Nashville. Nashville just feels like the proper place for a Bitcoin conference. I can't guarantee we will be on main stage, or side stage, or even performing a puppet show. I can, however, say that we will be hanging out with the plebes, and if we have no obligations, we will very likely be getting drunk. Bitcoin Magazine is introducing a new event this spring, Bitcoin Asia. It's shaping up to be an unmissable experience. Stay tuned for more info. Whether you want to visit Bitcoin Asia or Bitcoin 2024 in Nashville, we have a coupon code for you. Use coupon code BCB for 10% off any ticket to either event. That's code BCB. Dan and I are paramedics. We see people day in and day out who have one major concern: insurance. They either have no insurance, or they have some inadequate insurance that doesn't cover a thing, while sticking them with a huge premium. They're worried about the cost of the ambulance and the hospital. Sometimes they refuse to be transported to the hospital for urgent needed care just because they don't have insurance. This is where Crowd Health comes in. Crowd Health is not health insurance. It's better. You contribute every month to a fund that covers you and assists other members in need. If you ever have a significant health issue, you can get crowdfunded. You pay the first $500 and then the community will step in to help you out. Crowd Health will negotiate on your behalf to obtain the best price possible. If you're sick of overpriced and underperforming insurance companies, try Crowd Health. Support humans, not giant healthcare corporations. You can try it starting at $99 per month for the first 6 months if you use code BLUE. That's code BLUE. Have you been paying attention the last few years? If so, you know one thing. Not your keys, not your coins. This is a quaint saying, but it's real. If you're not holding your seed keys, you have a Bitcoin IOU, not Bitcoin. CoinKite is the maker of the Cold Card Mark IV. This is the industry standard for holding the keys to your Bitcoin. Holding your keys should not be intimidating, and it isn't. The Mark IV makes this an incredibly simple process. You could be a degenerate firefighter and hold your own keys. That's how simple it is. If you want to create a more complex setup, the Cold Card Mark IV has you covered there as well. You can create a multisig using a cold card, a tap signer, and even the upcoming Q1. Speaking of the Q1, if you want to have every bell and whistle and give yourself no boundaries as far as interacting with Bitcoin is concerned, the Q1 is your signing device. CoinKite makes some of the most sought after gear in Bitcoin. The block clock, seed plates, the open dime, and the Sats card. Everything you need to secure your Bitcoin. Click on the link in our show notes to get discounts at the CoinKite store or use code BCB for 5% off the Mark IV.
Yeah, I think this is apt for a lot of Bitcoiners that plan on or think that they will be quite wealthy. And I think there's a chance that they will be. There's a lot of people probably listening to this show that have amassed a fair amount of this asset that the three of us think is going really, really high. And that's going to mean that your estate is going to be a lot bigger than you anticipated. And with that is going to come the necessity for you to plan. There are people that can do it on their own, but they're far and few between. And getting advice can save you not a little bit. It can save you a lot if you get to a certain stage and point in life and you're looking to take profits or whatever the situation may be. I guess I just caution people against being overconfident with their knowledge and aptitude when it comes to really efficient tax strategy and estate planning and that sort of thing. We'll get into that more later, but it requires a real life expertise. As obvious as that sounds to you, I don't think that's that obvious to a lot of people.
No, and to be fair, I think the Bitcoin community has probably been a little jaded with the advice that they receive from financial planners across the board. And I know there are some exceptions to the rule. You guys have got a number of great advisors and a Bitcoin advisor network over there I'm very familiar with, Morgan Richard and the like, Jim as well. So I understand the reticence, the reluctance to seek advice from, that profession on this. But there is some substantial benefits that can be gained by doing that. And I wouldn't be too quick to write it off because there is some significant value that can be derived from having that conversation and sorting that out. And I'll go into this deeper in a later point, but we do think Bitcoin's going up a lot. We think it's going to be worth a lot of money, particularly for clients who are based in the United States. Ensuring that those assets are protected from any litigation or given the best form of legal structures to defend yourself from litigation is going to become increasingly important. When Bitcoin's at 40 or 50,000 a coin, hey, not too many really care about it. But if Bitcoin's going to 10, 50, 100 million bucks a coin, which we think it is, or I do anyway, and then that's a very different conversation. You don't want to be holding on to that stuff personally because then there's just a massive target on your back.
I like someone throws those numbers out casually, dude. Yeah,
I know, but I have to ask this question, and I don't want to derail where you're going right now. I want you to get back on that, but what is the time frame that you're talking about when you spit out numbers like that?
I think we get to 10 mil by 2030.
Really?
That is
you know what they say humans can't really think in exponential terms. That's either A, insane, or B, I just can't think exponentially the way you're kind of describing it. And it's just hard to believe, but it would have also been almost impossible to believe in 2012 that this thing was going to be worth $45,000 in 2023. So certainly wouldn't disregard it. I just think a lot of people hear that number and think that like, this guy doesn't know what he's talking about, he's crazy, or there's a lot of stuff going on under the hood that a lot of people aren't considering on the other side, you know?
Yeah, I think it's probably that there are two problems with looking at this. And the first is we don't have a framework for valuing Bitcoin because we've never seen an asset like it. So we don't have a reference point for it. And, I've listened to a heap of your podcasts. I know you boys have studied value investing, Benjamin Graham, all those boys. And, you look at fundamentally all of those valuation models work around a risk-free rate. It's an internal rate of return. It's a, free cash flow, whatever it is, it revolves around an interest rate and then a discounted cash flow to come up with a valuation of a business. The problem with Bitcoin is there's no cash flow to it. There's no interest rate. There's no risk-free rate on it. So how do you calculate that? And then, most people look at the nearest thing to it, which is gold, and think, oh, well, let's put a valuation framework around it of gold. And quite frankly, I think that's limiting. And this is where happy to go through that at a later stage to tell you how I think, because, basically I've spent a lot of time looking at this, trying to come up with a framework for better understanding the potential value of Bitcoin. And I'll walk you through it. I think there's some pretty logical assumptions with it, but I think in the next 10 years, we'll see $10 million a coin, which is a 200x from here.
Yeah, I say we do this right now. We'll round back to kind of advising and stuff. But before because numbers have been tossed already, right? It's been whipped out. It's on the table. We just heard the thump, right? And it's time to do some explaining. And I think what I appreciate about your tone when you speak about this stuff is you get the skeptics. Like, you fully understand when you say these things what a lot of people are thinking. And there are moments in Bitcoin, I don't know if you guys, I'm sure you're going to agree with this, where you get so bullish and you feel like your understanding is at a level and you feel like the game theory is mapped out to move in such a kind of inevitable direction that you end up saying things that you cringe at yourself when they come out of your mouth. You're like, man, I know how people are going to respond to that. And you've said yourself, you generally stand by the idea that if it looks too good to be true, it probably is in markets. And I think that is not a bad heuristic for most investors. This is part of the reason, Peter, that I am not too cool for the likes of, say, Dave Ramsey. A lot of people talk shit about Dave Ramsey. Oh, he wants 15% mortgages and blah, blah, blah. He pays off debt in the wrong order and all this shit. Dave Ramsey is very practical, and he keeps people away from touching shiny, harmful things. Generally speaking, when you go chasing tail in finance, you get fucked over. The challenge is the three of us we have that disposition, but you're sitting here saying, I understand everyone's thinking that. I think this asset is different. Do the best you can to give us sort of a high level thesis on why you think Bitcoin is so different, and what are the mechanics of how it could amass valuations that are as jaw-dropping as the ones you're throwing out.
I'd like to look at it from a technology perspective to start with, because that's something we can all agree on. And, it's an irrefutable argument. So, you look at the technology behind Bitcoin, and there are 4 key technologies that I think are new to market, never existed before Bitcoin was here. And, the first being absolute digital scarcity. So digital scarcity didn't exist prior to Bitcoin, and absolute digital scarcity didn't exist in the universe prior to Bitcoin. So that is a fundamentally very powerful thought that has huge ramifications for a host of different reasons.
Right. But and it's also a thought that people can't really understand because it just doesn't exist in nature.
Correct.
Go on.
And this is where we hear the FUD about, oh, don't worry, they'll just create another Bitcoin. And what if I create my coin? And it's like, anyway, no, you can't do that because of, multiple different reasons. You're not going to have the same network effects. You won't have the hash rates. It won't be supported by the nodes, a multitude of different reasons. But understanding that technological innovation, that step function change of creating absolute digital scarcity is, in its own right, is a $100 trillion invention, I believe. But here we are talking about Bitcoin. It doesn't even have a market cap of $1 trillion. Moving along to the next innovation with Bitcoin is seizure resistant. And this is the first time in history that we can store an asset in our head with 12 words, and we can literally die with the asset. Now, because, we're not far removed from Neanderthals. We still don't grasp this concept on a social level. And we still think that if I can kill you, I can take what's yours. Bonk on the head, $5 wrench attack, I'll take whatever's ever yours. And, the bit of gold, the piece of paper, the money under your bed, whatever it might be, I can have it. Well, guess what? With Bitcoin, that's not possible. Or there is a possible prevention of that. And this was highlighted in the last 2 or 3 years with the Russian invasion, and then the US and the rest of the world basically sanctioning and taking the foreign reserves of Russia. All of a sudden, 500 billion in foreign reserves were literally taken from them. Now, I'm not a Russian supporter, but I'm all for property rights, and that kind of looks like a shitty deal. And if Putin had have understood that, hey, there's an asset that no one can take from you, that you could put your money in, and guess what? They can never get it unless you want to give it to them. I'm pretty sure he would have bought $500 billion worth of Bitcoin, and we'd have a market cap at $10 trillion by now. But here we are at a $1 trillion market cap, and people, broader community, outside of Bitcoin doesn't really understand the value of having a seizure-resistant asset. The next one is in line with this as well, is a censorship-resistant asset. As the government overreach continues, and corporate governance really stretches their ability to mess with people's liberties when it comes to banking and the like. We saw this with the Canadian truckers. I'm not political, but what I do or don't really like about what happened up there is that there was no due process for the censoring of their bank accounts. And I'm all for censoring bank accounts of suspected terrorists and the rest of it, but there was no due process there. And that's something I would hate to happen to myself or you or anyone else. And I want to make sure that we have a due process. And this is where Bitcoin is the first asset in history that is censorship resistant. So seizure resistant and censorship resistant, by themselves are probably $100 trillion, market caps themselves in their own right, once people understand that and it's broadly understood. The final thing, and this is where the bulk of the value in Bitcoin really comes in, is having an immutable ledger, supply and issuance. And that is a first-time innovation with Bitcoin. Up until now, you never had an immutable ledger. And this is where, I look at this and think there are basically 3 phases to humanity. There's pre-written word, which is basically, we're running around trying to kill woolly mammoths. Then there's the written word, which is basically everything up until the time that Bitcoin existed. And now we're in the recorded word era, where basically every transaction on that blockchain is immutable, can never be changed. Basically, we have a perfect record of history for the first time ever. That is an immense thought. There's no more fucking around with, winners write history. Guess what? It's on the blockchain now. You can't fuck with that. That is an immense thought. So
yes, it is.
A lot of people don't really understand that and the power of that. All of a sudden, that is going to curb human behavior dramatically to ensure that we behave in a better fashion.
I agree 100% with each one of those points. I think that the fundamental problem is that when you say that, and I can receive that, and I feel like I'm further along with understanding deeply each one of those points now than I was, say, 5 years ago.
Yeah.
The problem is that most people can receive that information, but they can't really fundamentally understand it. And I know, Dan, you've had these moments. I know I've had these moments, and I'm sure, Peter, you have too, where you've cognitively received that information, but you haven't really understood it. Like it almost takes some time for that to marinate, for you to really come to grips with the fundamentals of what this means. I'm not sure that I've really hit base level with all of this yet. It's still, a lot of it still ruminates and still hits me once in a while. But what I think the real fundamental problem is here is not that none of this is all true, exactly as you explained it. The problem is for the masses to really come around and understand why this is a big deal. It seems like it takes a lot longer than I would expect. We use email as an example of like a technology that changed the world, but it took a long time. I think the first emails were sent in the 80s. Maybe by 1998, the early majority was involved using it. By 2008, just about everybody. And, by 2018, even the laggards, grandma's using Gmail, everybody's using it. That's a good solid 30-year period of time. I think Bitcoin is, I'm not saying I don't think you're absolutely potentially correct with that $10 million call, because we already are, 14 to 15 years into this thing. And even the people that are talking about this, reading about it all the time, myself is who I'm referring to, I sometimes don't think I truly fundamentally understand this, because it's there's so much to really dig into and parse through. I'm just saying it does take time, like lots of time for the tertiary people to really come to this understanding. And some people, honestly, I don't think ever really will. They'll just be using this money and be like, oh yeah, it works.
And I also think when it comes to truly grappling with something, you kind of need to see it to believe it. And we are still outrageously early in adoption. Peter, I've heard you say you think we're 0.1%. And in some ways, if we really crunch the numbers, I think that may be over exaggerated. So few people understand this. And so if you're a Bitcoiner who thinks that you do understand it, it's hard to really know that that's true until you see it manifest and you see it click for other people. I love your point too, Josh, of receiving information and not understanding. And for somebody that's done a lot of study into Bitcoin, you think in this circumstance, as we do, that you truly understand it, and a lot of people are unable to really digest what you're saying. Have the humility to realize this is just a broader life theme, that's true of you too. There's things that people are telling you. There's things you're reading and intaking that you think you understand, but you don't truly, and you need to peel it back further. One other comment I wanted to say, and hearing you kind of talk, Dunworth, about just the tremendous and momentous innovation that is Bitcoin. I think what's even more powerful, and I'm sure you'd agree, maybe not more powerful, but equally powerful, is the timing of that innovation. And I've done this, I've read this before on the show or gone through this, but I have this slide. I gave this talk up in Minneapolis at their meetup a while ago, and one of the slides was basically asking bears to explain how demand for this asset is going to go down. Because I really feel like the onus is now on the other side. You're going to have to explain how demand is going to decline. And so I went through sort of what Bitcoin is and why it's so perfectly timed with what's going on in the world. And a few of the points I made was it's the hardest money in human history at a time when hard money may be in some of its highest demand, right? Looming sovereign debt crisis, unbelievably obvious debasement forthcoming and already happening. Number two, Bitcoin is anti-fragile money, juxtaposed against some of the most comically fragile financial behavior we've ever seen. There's more intervention than really ever before. Number three, it's unconditional and permissionless money in an age of surveillance, censorship, capital controls, currency wars, conditioned sovereign reserve assets, like you said with Russia. And then the final point I made was it's frictionless money in a world with 180 fragmented fiat currencies. So at the end of the day, you start looking at what it offers and then the timing of when it's offering. And it's like, explain to me how people are not going to want this in large quantities. I just have not heard good explanations for how that's going to happen. And that's when you kind of sit there and scratch your head and go, holy fuck, this could go through the roof.
Yeah. What you just said makes tons of sense. And it reminds me of, I think it's either Warren Buffett or Charlie Munger who said, the money is not made in buying. The money is made in waiting. You just buy this stuff and you wait. In the sitting, is that right?
Yeah, and I think that's a throwback. Charlie Munger got that from Reminiscences of a Stock Operator, which, if anyone listening hasn't read that book, it is one of the greatest trading books in history. And it's probably a great lesson in it too, because the world's greatest short trader of all time, Jesse Livermore, he was the world's greatest short trader. He made millions and millions, hundreds of millions of dollars at the turn of the century in the early 20s. And, a lesson to all Bitcoin hodlers out there, trader, best in the world, died penniless. Just buy and hold your Bitcoin.
I read a little bit about him recently. Didn't he go massively like exponential, lose all of his money, made it all back? Didn't he multiple times throughout his life make it and lose all the money?
Yeah, he did. And probably one of the most interesting things about him, and that book I would recommend to anyone, just it's a financial, it's like an almanac of, of great trading decisions and how to trade, even though he died penniless. And that's really the lesson I got out of it. But one of the big things in that book was JP Morgan at the time, I think he accounted for something like 4 or 5% of the USA's GDP, which is an insane figure that no one in history has come close to.
Wow, I've never heard that before.
Yeah,
that's crazy.
I want to say he, or it might have been Andrew Carnegie, but JP Morgan was on the banking side, Andrew Carnegie a little bit earlier with the steel.
I mean, JP Morgan literally bailed out the US at one point before the Federal Reserve. He bailed out the country.
He did, and he didn't get that done without Jesse Livermore. So he pulled Jesse Livermore, who was holding all the shorts on the market, and he was about to make millions, if not billions of dollars. And JP Morgan literally pulled him into a room and said, "You're going to ruin the country if you cash those in. I want you to throw them." And to Jesse's credit, he didn't cash them in. So it could have been a very different story if JP Morgan...
He put his balls in a nutcracker and said, behave or these things are going to pop. Yeah, that's probably what happened. Probably got dirty. Yeah,
I bet it did.
I would have thought so. So, maybe JP Morgan, is not as bad as we think. People are never as good, never as bad as we think. But, the US has got to, thank JP Morgan for avoiding absolute catastrophe and total wreck and ruin, in the early 1900s.
Yeah, JP Morgan was like, I got to stand up this Federal Reserve, or I don't want to be on the hook the next time these idiots fuck everything up. Just have them print money.
Folks, when a fellow firefighter, family member, or friend asks us where we buy Bitcoin, we point them to Swan. It's the place Josh and I have dollar cost averaged into Bitcoin for years. At Swan Bitcoin, you can set up automated Bitcoin savings plans as well as execute instant purchases. They serve clients of any size, from firefighters to institutional investors, and an account is startlingly easy to set up. I've watched a fireman do it on a smartphone while sitting in a recliner in less than 7 minutes. Swan also offers Bitcoin IRAs. You can start or roll over a traditional or Roth IRA with enterprise-grade custody, attentive service, easy onboarding, and transparent fees. Visit swan.com for details on everything that Swan offers.
Let's talk a little bit about self-custody. You, the Bitcoin advisor, you guys have a custodial model. We want to talk. What I would like to do is kind of talk about the differences, compare and contrast multisig on your own versus multisig in the setup that you guys are proponents of. What are the pros and cons of each? And just talk a little bit about like how you can custody this stuff, Bitcoin, obviously, in a way that keeps you and your family safe, even in the worst case scenarios. Like you tragically die in a car accident and there's a way to recover your funds.
Yeah, I think this is a really important point that a lot of Bitcoiners haven't spent enough time thinking about. And I can tell you, being on the other side of it, having hundreds of clients who self-custody Bitcoin, it's probably the most important thing or contribution that I can make to this space is to, tell Bitcoiners to start thinking about this because, we don't live forever. We're all going to die, and we need to have a plan in place to recover the Bitcoin because everyone here has made such sacrifices to get the amount of Bitcoin that they've got, to hold that Bitcoin, to make the changes for their family and potentially provide intergenerational wealth that is going to completely redefine, a family dynasty and, the future of families moving forward. The first thing I'd say is that, if you're self-custodying, this is, I'd like to say you do you. If you're self-custodying and you've already got your setup and it's all down pat, then congratulations. I'm thrilled, and I'm hoping what we talk about can give you some ideas to improve your setup. The first thing I'd say is when it comes to self-custody, and if you're doing this now, a great test that you can do is basically write down on a piece of paper, please move my Bitcoin, and hand that to your wife and say no more, or your partner or your children or whoever's going to be receiving it and looking after it. And if they're unable to move those Bitcoins in a satisfactory fashion, they don't have access to it, they can't move it, or they wouldn't know where to start, then there is a serious amount of work that needs to be done to bridge that gap on a knowledge basis. So I'd say start there because that will show you your holes in your own self-custody setup that you've got. And if we go down the line, there's basically 1,000 ways to skin a cat. And probably starting with the most simple is leaving those on an exchange. We all know that's a really bad idea. Get them off exchange as quick as possible and get help in doing that. I think one of the guys or one of the companies in the space that are friends of this show that I've got an enormous amount of respect for who do this day in, day out is the Looking Glass team with Seb and Daz.
We love those guys.
They spend they spend hours a day helping people self-custody, and they've got a great product that helps you into a single sig setup, and they give you a stack of education and learning, and they'll walk you through the process, and there's all these resources to get into a single sig setup. Personally, I think single sig is fraught with a number of potential problems, though, in that there's a single point of failure typically. There's also the problem that if you don't properly secure your Bitcoin seed words, you will not know that your Bitcoin's been stolen until it's too late.
Yes.
That is a massive problem.
Yes.
Like, you can drive 5 hours west, find a desert, dig a hole, get your GPS, put your seed plate in there, and all of that's good and proper. And 10 years down the track, you've still got it all sorted. You think it's good, and then one day all of your Bitcoin disappears from your single sig wallet. You think, what the hell just happened? I've just lost all of my wealth. Like, what the hell? And this is where the single sig wallet I'm not really a huge fan of, because it has that single point of failure. And I want to try, and what we've tried to do with Bitcoin Adviser is remove any single points of failure, because if we think this thing's going to be tens of millions of dollars of Bitcoin, we want to be planning for that now and getting custody setups, basically institutional grade custody for, mums and dads. And this is where the single sig, I don't think, really cuts it. If that was a $10 million Bitcoin, I don't think people are storing that on a single sig device. So then we move to multisig, and I love multisig. I think multisig has got a whole host of different benefits. And I'd probably start with, the software providers in Unchained. Swan's releasing a product, and I've had a look at that, and I've got to say it looks really good. Unchained's been the mainstay. I've got to say the Nunchuck team have created some incredible multi-sig products with optionality out the wazoo. It's insane how good that stuff is. So I'd start with the software providers and work into it, because typically what they do is they will hold a key, and then you'll hold two of those keys yourself. And this is, an introduction to multi-sig that you can then go down the rabbit hole into completely looking after it yourself through the use of Sparrow or Spectre or another software provider. But that's a really great place to start. It's not my preferred option, though, because when you're doing it all yourself with one of the multi-sig providers, you still have a single point of failure in yourself, in that you hold two of the keys. And now the problem is, to friend of the show, Luke Groman, you can't ride two horses with one ass. Now you're staring at two keys, trying to look after two keys and make sure you don't lose them, because if you do, then you've lost all your Bitcoin. So it doesn't solve much of a problem up on what is a single sig device, because now you've got two devices to look after. And if you lose those two devices, then you've kind of lost what you've got. The other complication with multi-sig is that in order to recover your Bitcoin, you also need to take down the wallet configuration, which is really critical. And a lot of people don't really understand that. They think, oh, okay, well, if I've got two of the three keys, then I can recover my Bitcoin. It's all good. It's like, no, not only do you need two of the three private keys, but you need three of the public keys. And that wallet configuration is kind of a map to show you where it is. So you need to actually have three of the public keys. And a lot of the people don't really understand the most important thing about when you go to the service providers is actually getting that wallet configuration off them and storing it in a separate place. Because what you want to build into your self-custody setup is you want to have redundancies from everyone involved in the process. You want to have redundancies from yourself. You want to have redundancies from the multi-sig provider. You want to have multiple different options. And this is where, for me, the collaborative custody, what we deliver on, solves every single point of failure. You're not reliant on yourself. You're not reliant on the multi-sig provider, and you're not reliant on us. And this is where removing yourself as a single point of failure provides an enormous amount of peace of mind from a family dynamic perspective. And this isn't, collaborative custody isn't really about, the young bucks who are not your keys, not your coins. I'm just going to YOLO it all in, and if I lose it, it's a contribution to the network. I'm all for those boys. And, I've been there, I've done that. And joyously, I've actually got a gorgeous wife, two young children. I've got a large amount of my wealth stored in Bitcoin, and I don't want to make a contribution to the network. As much as I love you boys, I prefer my family to have the Bitcoin than, make a minuscule improvement on every, Bitcoin holders holding. So I think it's really important once, life events happen that, you're responsible for people, then all of a sudden the recovery of that Bitcoin becomes paramount. And it's not so much about the privacy and, happy to talk about KYC, non-KYC and the rest of it. But the most important thing in my life and my client's life is the security of your Bitcoin. And then very closely and just as important is the recovery of your Bitcoin. So what happens, to your point, Josh, about what happens if you get hit by a truck or a bus or you don't wake up tomorrow? Then
get eaten by a great white.
This is where you've got to have that plan in place that is able to recover it, and you want to set it up yourself. And this is where happy to help anyone who wants it, but we make all of the resources available online. Go through our website. There is literally a ton of resources there, and we don't want us charging a fee to do it for you to stop you from actually improving your self-custody setup yourself. So there's a whole heap of checklists that we put up there. You can set your own setup and self-custody with those benchmarks that we put up to say, hey, have you thought about this? Have you thought about that? Have you thought about, wallet configs? What happens if the multi-sig provider fails? What happens if you fail? Like, all of these things need to be considered. And, if we're planning for a multi-million-dollar Bitcoin, these are the things you want to have locked down, because you've done the work. You've basically got the ball to the line. Literally all you need to do is put it over, and you don't want to fuck it up at the finish line. Like that'd be catastrophic.
Yeah. And you'd rather figure this out now at 40,000 than at future Dunworth projections of hundreds of millions. I love everything you just said, and I have a couple things to fill in. The first comment is just an overarching Bitcoin custody point, which is that this is early technology. And we have to remember that a lot of times early technology is not that easy to use. It sounds great on a podcast or on Twitter to tell people that custodying Bitcoin's so easy your grandma can do it, which is somewhat true maybe on a single sig setup. I mean, but if we take the most simple single sig configuration, it has a really, really, really significant flaw, which you highlighted. And I love the fact that you brought that up of you don't know if your shit's compromised. Maybe Aunt Mary Lynn went upstairs during Christmas and found your words and is going to rug pull you 12 years from now, and you're not even going to know it was her. You know what I mean? So the point is you just have your pants down in one area, and there's no real way to fix that, which then pushes most Bitcoiners eventually, and they get a certain level of seriousness, towards multisig. Now, I encourage everyone that's a Bitcoiner, the fee market's not so out of control that this doesn't make sense anymore. Regardless of whether you're going to do it or not, go set up your own multisig on Sparrow. I'm not saying it's hard. It's totally doable. Josh and I have done it. Anyone can do it. But then you start thinking about, can my wife do this? What if we both pass away? Can the next person do it? And you start to realize that maybe for a techie individual or someone that's experimented a lot with Bitcoin, you can say that multi-sig is super doable, but it's the reality is it's not for most people right now. And this kind of leaves us at a point where people are looking for solutions. Now, someone might listen to this and say, well, fuck that. Bitcoin's not that usable right now. Careful, because that doesn't mean it's not going to work. It just means it's early. A lot of these tools are going to get more automated. There's going to be many things built on Bitcoin that are going to lubricate this process. But right now, there's some glass and sand on it, and it's not sliding in all that easy for a lot of people, and you may need some assistance. And that's where we have been saying on the show for a long time that collaborative custody setups make an enormous amount of sense. As you mentioned, though, the onus is still on you. And what I like about what you folks are doing, although it had no solution's perfect, and maybe here in a second,
Agreed.
Josh can come in, I can come in with the reasons that your solution's not perfect. You wouldn't say it is, but the one thing that is beneficial about your solution is, as you've said before, you can literally walk out the door with zero Bitcoin knowledge. And not even you, but your wife can come to you with zero fucking Bitcoin knowledge and have access to the Bitcoin in a situation that is still custody. It's not on an exchange, right? And I think there is benefit there for a lot of people that haven't come in yet, because it was as we onboard orders of magnitude, people are not going to be as hardcore as the current cohort of Bitcoiners right now. And there's going to need to be hand-holding, at least in this interim term, while this early tech isn't super easy to use. I know that may not sound awesome to people, but I think it's the reality.
Have you had the intention to mine Bitcoin, but thought that the equipment is too expensive or that running your own miner might be a bit too technical? Maybe you thought it would be cool, but the cost of electricity where you live makes it pointless. With HeatBit, you can kill 3 birds with 1 stone. It's a Bitcoin miner, a heater, and an air purifier all in one. It's a plug-and-play device that could not be simpler to operate. It has the latest 5nm chips to make it one of the most efficient Bitcoin miners in the world. On average, the HeatBit Mini pays for 70% of the electricity it uses. The HeatBit Mini also operates quietly. Good luck selling the idea to your wife that you're going to plug in Bitcoin miners in your basement that operate at the volume of a lawnmower. Not going to happen. HeatBit operates silently while keeping your significant other warm and cozy. HeatBit cares about your marriage. So, if you want to mine Bitcoin and remain married, order a HeatBit Mini and keep warm while it pays for its own electricity bill. Visit heatbit.com and use code BCB for 5% off a HeatBit Mini. So I wanted to, so I'm sitting here thinking like to play devil's advocate, because I know there's a lot of people listening who will think I am completely competent to make my own multisig. I don't want to disseminate keys to other people because I don't necessarily know them, trust them. Can you give us a little bit more information about how exactly does this work? Who are these other institutions? And I know that they're multi-jurisdictional. So here's a scenario I want to hear you kind of flesh out for us. This is a kind of dystopian future that I hope doesn't ever happen, but it's certainly not out of the realm of possibility. So if you are using this kind of a setup with custodians outside of your jurisdiction, let's say I have a key with you in Australia, and then there's another one in, say, Britain, and then I have one in the US. And these are all Western countries that typically do move in fairly lockstep when it comes to these kinds of draconian regulations. What happens in the potential future where there is some kind of a jurisdictional some kind of a law that is passed that could be happening simultaneously across these jurisdictions that forces those individuals or those entities holding those keys to divulge them? How would that play out?
Great question. There's still a multitude of different things that can be set up to avoid that risk. And before I go into it, I'll just answer, having your keys across multi-jurisdictions is a vast improvement of having all of your keys in one jurisdiction. So
for sure,
just understanding that that's a much better outcome than
and I don't want you to feel like I'm attacking you. I'm just trying to say devil's advocate.
Please do.
I know people are thinking like, what is the weak spot here? What is the worst possible scenario? And then that's about what I could think is the worst case scenario for this kind of a setup. So yeah, go ahead.
And in the interest of your listeners, and with all due respect, go as hard as you want on this, because I think it's a learning experience for all of us to understand what this is. And I think you owe it to your listeners to just gloves off, just go as hard as you want to. And
100%. Wait, and I want to make one clarification here too, because I think we've explained this, but not in one succinct situation. The setup we're talking about that BTC Adviser provides is that you're in a collaborative custody setup. Let's use Swan or Unchained or Nunchuck or whatever. They hold one key. BTC Adviser holds a second key. You hold the third key. So you have, let's say, one of 3 in this setup. That's a fair representation of what we're talking about, right, Peter?
It is.
Okay.
Yep. And
all right, go ahead.
There's variations on that, but I think to the question around a coordinated attack on Bitcoin across multiple jurisdictions, that is possible, but highly improbable. And the fact that your keys are across multiple jurisdictions should give you some comfort, or more comfort than having all of your keys in one jurisdiction. The other thing is, and this is where back to Bitcoin being a seizure-resistant asset, and these are some of the technologies that I think are going to come down the track that I'm personally really excited about. I'd probably, I know we had it on the call sheet to talk about it, but I'd probably talk about it now because I think it solves a lot of the issues that you talk of. Firstly, there is, although I believe it's impossible for us to collude with any of the other service providers and the rest of it, in the next 4 years, there's going to be cryptographically provable, verifiable evidence that we cannot collude with any of the service providers. This is what's coming down the pipe. So all of a sudden, that concern around collaborative custody will be removed from the equation, which I'm so excited about.
Nice.
Yep.
That sounds
So it
like
gives
a,
you full
a
control.
real nice addition to this.
Dude, and this is a prime example of don't write off early tech, as we said, because things are going to be built. Like you're hinting at stuff like mini script or whatever, the programmability of Bitcoin that's going to allow, we know that it's going to allow for things that don't currently exist. And that's not just pie in the sky. These things are already being developed and implemented and tested, and it's going to move out really quickly. I mean, you're on the front lines of paying attention to this, but the speed at which Bitcoin's being innovated on is something that Josh and I can't keep up with.
For sure. And another good point here, sorry to just take this right out of you. Dan and I are just super grabbing the mic from you. But I was talking to Seb about this through text. We were talking about like his setup versus what I have going on. And really what it boils down to is, do you trust that you're not going to fuck up more than someone else is going to fuck you? And for a lot of people, probably myself included, if I'm going to be totally honest, the odds of me fucking things up are probably significantly higher than a coordinated effort by people holding these keys to take my money. So that's a consideration that you need to take, and you need to actually own yourself. And if you decide to do this yourself, I think it's totally possible. I think most people, given a little bit of time and effort, can do it. But you are completely on the hook. There is no one to help you. You are on your own in the wilderness with a compass. And if you follow the wrong direction, you're going to fall off the cliff in the darkness.
Yeah. That's a dark place to be. And we've spoken to people who have had that happen to them. I can tell you countless stories of, phishing scams, clients getting, taken for 30 plus Bitcoin, and literally makes me want to vomit, hearing that sort of thing. And this is where, the innovation that's coming down the pipe at the moment is mind blowing. Like, if we talk about that, the risk of, you mucking up via someone else, the mini script, programmability that's coming in, you can have like basically a parent key, like a master key in your quorum of keys. This is coming, and this will be here in the next 4 years. I don't think it'll be here for this bull cycle in mainstream consciousness, but for the next bull cycle, it definitely will be. And you've got a master key relationship where you've got two subordinate keys, and in order to move any Bitcoin, you've got to have the master key sign. And when you couple that with a decaying multisig, that if you lose the master key, then after 6 months or 12 months or 2 years, then the two subordinate keys can actually sign a transaction and move stuff for you, then you get the best of both worlds. You get to be fully in control of all of your Bitcoin. And then if for whatever reason you fuck it up, and, we're all human, so, it's going to happen at some point in time, you then fall back to the other two keys. And you can have two other professionals managing that. And this is what we deliver on, is that, we've been doing this for, we're in our 8th year of doing this for clients. So, you kind of get good, you understand, good key hygiene, key management, the rest of it. And, we work with professionals like Unchained and Swan and everyone else who, are really diligent in this space. And you get the best of both worlds. And this is what's coming down the pipe. And this is one of the things that, is a personal goal of mine. I don't think it's ever attainable, but it's a nice dream to have, is to get every Bitcoin off exchange. And this is where I believe if we're going to move Bitcoin self-custody from 0.1% adoption through to the 10% that I think we can get to, then collaborative custody is going to move that needle dramatically, because the Bitcoiners who are here now, this product may or may not be for them. And I'm not concerned about that. What I am concerned about is getting the remaining 2 million coins off exchange, finding out what price discovery looks like when there's no Bitcoin to buy, and helping those people who aren't technically savvy or want to invest hundreds, if not thousands of hours into Bitcoin to safely self-custody and make sure that they don't lose their coins. And this is the gap in the market I see, that, we really want everyone self-custodying. And I understand that there's going to be some pushback from Bitcoin Puritans who think, no, not your keys, not your coins. You've got to own all your keys and the rest of it. It's like, look, that's why adoption's at 0.1% or less. The bulk of people don't want to be responsible for themselves. And this is as close to perfection as we can get with self-custody of not your keys, not your coins. And, we do have to make some sacrifices, no solutions, only trade-offs.
Peter, I have the perfect slogan for the Bitcoin Advisor. It just came to me.
Oh boy.
Bury your seed in the bush.
Yes.
That'll
Bury it deep. Bury your seed
I'm
7
sorry,
inches.
I've been sitting here for like 2
7
minutes
inches.
having thought of that, just trying not to laugh. And you're looking at me like, why is this asshole laughing while I'm having like, I've just been ruminating about this for like 2 minutes straight.
Bury your seed in the bush for your posterity. Yeah, Bitcoin Adviser.
Marketing game for you, Josh. Good.
Yeah.
All right.
Yeah.
You guys can use that. You know, I won't have a problem with it.
I think we think obviously your product's way more than this, but for the skeptic that just views it as training wheels, let's say, well, there's a time and place for training wheels, motherfuckers. If you tell kids they can't use training wheels, guess what we're going to have in society? Dead kids, right? For kids to learn how to ride a bike, they need a way to get into it, to get acclimated. And this is a realistic, workable scenario for a lot of folks, especially those oncoming. And I also think a lot of the people that are too cool for collaborative custody, not all of them, but a lot of them haven't developed a huge nest egg. It's easy to make that statement when you're 24 years old and you can completely recover from sending it, right? But once you're a little bit older and you've worked really hard and you've amassed some wealth and you have a family, it starts to feel a lot different. And even as a reasonably hardcore Bitcoiner at this point, I have a huge distrust of myself, right?
Yeah.
And everyone should, even just psychologically. I mean, people lose their fucking minds every day in the town we work in. We watch people over and over again go manic, go schizophrenic. That could be you, right? So even protecting yourself from psychological eventualities, not just the thought of like a traumatic injury and you being wiped off the face of the earth. So there's a lot to think about here. And you said it early, which I really appreciate. No setup fits everybody. And this is where you have to start exploring and experimenting and thinking and talking. This needs to be a collective decision with you and your family, your significant other, and beyond. Like, I think when you were on with Peter, Danny said, I remember him saying, fuck, dude, I was just on a plane recently with my wife and I realized if this thing goes down, our Bitcoin's gone forever. Well, I don't want that to happen. I have 2 little kids. Josh does. You got kids, Peter. So you got to think big picture.
If you don't completely trust yourself and you don't completely trust the Bitcoin Advisor, you can always split this stuff in half. Like, you could do 50-50. You could do, half of it on your own multisig, half of it with Bitcoin Advisor. And that way, worst case scenario, stop laughing, Dan. I can't even look at it.
Bury half your seed in the bush.
Bury half your seed in the bush, pull out halfway, and you can still disseminate the seed, to another jurisdiction. No, but seriously though, that is not a bad consideration. I've done that with Unchained and then with my own stuff. And I, one of my weaknesses, and I'd be willing to bet heavily that this is true of a lot of people. I can't ever be satisfied with the way that I have it set up. So I'll have this setup and then I'll have another setup and then I'll maybe there's a weakness here that I want to change. But the problem is you do that enough and you're just increasing the potential that you're going to screw it up at one point. Like, you make some catastrophic mistake because let's say you've got 10 different cold cards and one of, you forget which one is which, or you didn't label them correctly. There's so many ways that you could accidentally fuck yourself over. So,
if you don't want to fuck yourself, don't touch yourself too often is the mantra there.
Yes. I don't know what we're going to label this one, Dan. I think bury your seed in the bush is going to have to be the subtitle of this one.
I got the giggles, dude. Fuck. There's something about Dunworth's face too, and just having spent. By the way, I got to throw in an anecdote here, Peter. We're not gonna out you at all, but Peter in person is, let's just say the vernacular is different in person, Josh. That's just it.
Yeah.
Things fly. Some words come out that haven't on this podcast, but
he's a consummate professional on podcasts, and I respect that.
And we goad him. I mean, it's hard to maintain the composure he has on the show with 2 hyenas like us. And I hat tip to you, Dunworth.
Well, thank you very much, boys. It's hard to resist the temptation to pile in on this stuff. So
to end your career, yeah.
I was just going to say, in conversations with Bitcoiners around the world, we optimize for ourselves, and often, particularly OG Bitcoiners, will set up their Bitcoin self-custody, which optimizes for themselves, and it's so perfect for them. that no other person on earth can recover it. And
yes,
the point is, it's not about you when you have family or when you have a large amount of wealth that other people are relying on. And it becomes, in some way, shape, or form, selfish to pursue that route without giving your family members the education to be able to recover it. And this is where I think, the trade-offs we make with collaborative custody is about, it's not about being the fastest, it's about being able to recover. And the collaborative custody protocol that we put together has been tested multiple different times. We've had, sadly, we've had 3 clients pass away, and we've been able to recover their Bitcoin from the grave. And unless you're able to do that, then, you've got some work to do. And this is why we make all of the IP and resources available on the website, because, the last thing I want to see is, Bitcoiners who have sacrificed so much to get to this point really miss out on the upside, or better yet, their family misses out on the upside. Because I dare say, if your household's anything like my household, I'm a complete punish when it comes to Bitcoin and my wife. So, it's just a roll of the eyes and, oh, not this again. Do we have to talk about, whatever it is in Bitcoin? Yeah, we do. Well, anyway.
Yeah, been there.
Yeah, there's any number of things like that too. Like, hey, do you remember how to get the safe open and shoot someone if they come in the house? Sure. Yeah, right. She hasn't shot a gun in like 5 years, Hopefully it goes in the right direction.
Just don't shoot me.
Yeah,
right. I'm probably, there we are again. Like, I'm probably more likely to get shot by her than anyone come in the house.
Yeah.
You heard it here first.
Let's end here, Dunworth. And this is, I think, will be a good opportunity for you to give more of a high level BTC Adviser spiel. Anything we haven't hit on from an estate inheritance planning standpoint? I know you're far more holistic than just multisig. Talk to us, I guess, about other just themes or ideas real quick that may not be on people's radar that maybe they do or don't need help with, and then where you kind of come into play and just the broad offerings that you have.
Sure thing. Thank you. Well, I think a lot of things that most Bitcoiners don't consider is that, you want to have, and it's really morbid to talk about it, but you want to have your last will and testament sorted. You want to make sure that stuff's locked down, that Bitcoin goes to where it needs to go. We fulfill a role in the pragmatic recovery of your Bitcoin, and without it, the whole last will and testament and legal system is a moot point if you can't recover your Bitcoin. So regardless of what legal decree there is or what the will says, what your lawyer tells you, unless you can actually recover that physical Bitcoin or non-physical Bitcoin, then you're just pissing in the wind. You're not going to get the Bitcoin and no one's going to benefit from it. So that's something that's really critical. We touched a lot on that. I think having your structures in place is really important. And, the start of a bull run is probably a really good time to have a conversation or address that, because putting your Bitcoins in a structure at a time now when they're about to go 5 or 10x in the next couple of years, it's a really great time to do it. In the US, you've got a number of different structures that, can be wildly beneficial for you. You've got future planning considerations. You've got inheritance tax in the US that you want to basically nullify if you can. There's also the ability to protect your Bitcoins from, the most common form of seizure, which is a really shitty topic to talk about. But, the most likely loss of Bitcoins comes from your partner that you sleep with. And, if you can't protect yourself from that, then you want to put in place the ability to protect your children and their Bitcoin from ever being able to be seized in a family law court. That's a really critical component that you've got to think about. And so that's the 2 major things. The final one is just making sure your setup's, as good as can be, and actually do a dry run with your partner or your beneficiary or, your children, whoever's going to benefit from that Bitcoin. Actually take them through how they do it. They don't have to know how much Bitcoin you've got, but they need to know how to, recover it if you're not there. And, you can set up, your Bitcoin in a way that is going to save them from, potential total loss. It just takes a lot of time to look at. And, this is why we created the Bitcoin Adviser, to talk to Bitcoiners about these sorts of things, because I don't think it's on their radar a lot. And this is where a lot of the, the really low-hanging fruit as far as returns are, in making sure all of that is locked down and squared away.
Yeah, I think about, in our line of work, there's this thing that's talked about a lot in education about fire safety called fire drills in the home. And we strongly recommend that families run through these scenarios with their kids. Hey, if smoke starts to come in your room or whatever the situation, what's the order of play? Whether that's close your bedroom door, head outside, meet at the mailbox, whatever. Running through these things. They're very, very unlikely to happen. Hopefully they never will. But running through that scenario with your loved ones is absolutely worth it if the shit hits the fan. The same is true with your Bitcoin. Like, run through these scenarios. Have your significant other put hands on devices or walk you through what they would do if you handed them that piece of paper. I love that word of advice, Peter. Hand them that piece of paper and say, move our Bitcoin. And if they sit there clueless, you've got work to do.
Yeah, I think that's
we
good,
could go
man.
forever. Yeah, we didn't get to a lot of this deck, but we'll have you back on. No doubt about it. Where can people find you and BTC Adviser stuff as we close?
The best place is on Twitter, Peter BTC Adviser, with an ER. Alternatively, thebitcoinadvisor.com with an ER. Just Google search the Bitcoin Advisor and our site will pop up, and there's a host of resources there. If anyone wants to book a meeting with myself or the team, our slots are plenty of slots available there. So we'd love to help in any capacity.
Cool. Thanks for your time, Peter. Appreciate
Thanks,
you.
Peter. It was a pleasure as always.
Great to catch up, guys.
Bury your seed in the bush, folks.
In the bush.